Operating expenses and cost of goods sold are our two primary forms of expenses as a business. Operating expenses are the cost of running the business. So, like, what does it literally take in order to keep Third Place running every day, whether you are performing services and sales or not? So, your rent is an operating expense because you have to pay it regardless of how many haircuts you do, right? So, we have a list of all of those things that are examples of operating expenses. And cost of goods sold are the costs that you incur in direct relation to selling or performing a service. So that could be raw materials that you use. In your case, like a raw material for a service would be shampoo or pomade, that sort of thing. Products that are resold or used to complete a service, when you sell a bottle of shampoo to somebody, that is a cost of goods sold. The direct labor to complete a service is actually a cost of goods sold. You make a 50% commission on your haircuts. That 50% commission is directly tied to the sale. Therefore, the commission is actually a cost of goods sold. You wouldn't call that an operating expense because you wouldn't incur that expense unless you sold something.
Yeah. I get a way to kind of think about it is operating expense is something that, like, if you're closed, you're still paying for it.
Yep.
Okay.
Yep. I can't read what the fuck that is behind the camera. Probably not that important. I learned later on to start making words bigger. So what is an expense? What is not an expense? An expense would be operating expenses we just talked about, cost of goods sold. Not an expense, owner draws. So even though you're taking money out of the business, it is not an expense. It's not something the business is paying for to keep itself running. An asset purchase is another example. Let's say you go out and you buy
Salon chair.
a salon chair or something like that. That actually becomes an asset because it's something that you own and you'll use over a period of time. That doesn't become an expense for the business, but what you get to do is you get to depreciate it. And depreciation is basically, we're saying that every year that it's in service, it loses value. People have been sitting in it, so the cushions get a little bit flatter, et cetera. You can't go back and resell it for exactly what you paid for it. So we take a portion of that and we expense how much it's depreciating in value every year. So that's a whole process, but basically that allows us to capture the fact that it is something that you bought and has value, but it loses value over time, and we get to expense that. So sales tax remitted is not an expense because remember, you just collected it on behalf of the government and then you gave it to them. So it's not something that they took from you. It's something that you basically did
held for them.
Yeah, exactly. And then employee tips. Again, this is something that you owe another hairstylist. So it's not something that was an expense. It's something you collected. So you took it and you gave it. So it otherwise has no interaction with the business.
Cool.
Purchases. So we've got asset purchases and inventory purchases. So an asset purchase, we just kind of talked about, like if you bought a $4,000 massaging salon chair, and that would be considered a long-term asset, which we depreciate and expense over time. An inventory purchase is something that you purchase to make an item or to resell to customers. So again, this is raw materials to manufacture a product or products to resell or complete a service. So in your case, mostly just going to be product. So like shampoo, conditioner, pomade, hairspray, etc. So these, basically the dollar value of these grows our inventory account over time. And then as we sell them, we have to go through and we have to create those journal entries